Today I'll be presenting bull markets, the good and the bad. Presentation agenda. First off, I'm going to go over a few comments on the main purpose of the presentation, bull markets. Then a few thoughts on gold and copper, followed by some thoughts on my two presenting companies, G Mining and Vior. And then a few words on my video series, Field Notes, and my newsletter, Junior Stock Review. So bull markets, the good and the bad. I'm sure most people are wondering what the bad part about a bull market is. And I agree with you. About 95% of it is excellent, and it's what we're all here for. The other 5%, I think, is what you have to be really careful of. And it's the carryover or the hangover, as I'll coin it, of ideas or over-optimism and the greed that you can feel when you're making money. And I've been susceptible to it, and it's something that I'm warning you against. Rick Rule has a great quote. He says, "Don't confuse a bull market with brains." And I heard this quote long ago, and I thought, that's smart. But really, unfortunately, if you enter the resource market, especially in the midst of a bull market, you can think too much of that success is built because you're smarter than the market or something along those lines. And unfortunately, it's not the case. And so you definitely want to keep this in mind, what Rick says. Each year, I go through my portfolio and I go through the good and the bad. And I look at what I did good and probably mostly what I did bad. In 2023, it was actually a pretty good year, all things considered. But in Q1, I had to get rid of a bunch of companies, and reflecting on why I had to get rid of those companies brought me back to this thought on bull markets and how thoughts and probably over optimism in a few cases led to some losses. And so that is the main purpose for this presentation. So the question begs is, did you remember to sell? Bull markets are the authors of bear markets and vice versa. As great as it is to ride that roller coaster up, unfortunately, at some point it does end. And so you have to remember to sell. And most people get the buy side right. They're like, you know what, I got to buy this company as cheap as I can. And they buy it. And then unfortunately, they get wrapped up in the emotions that surround it. They're like, you know what, because this is going to go up. And they keep on riding it and they forget to sell. And unfortunately, become a bag holder and ride it all the way down. And this is a problem. I've been a part of two really big bull markets in my life, 2016 and 2020. In 2016, it changed my life. Like, I left my career in steel manufacturing to become an investor full time. I was forced to sell. It wasn't something that I necessarily decided, hey, you know what, I got to close these positions and take some money out of the market. I had to rebuy a house. I had to prepare for not having a steady income. And so I was forced to take that money out. If you look at 2017, 2018, 2019, it ended up being a fantastic decision because really, especially in terms of the gold market, it was mostly sideways to down. 2020 was my best financial year so far. And I attribute my success in taking some money out to having a very good mentor and him hammering into me the importance of selling. And even though I took his words seriously, I still didn't quite do as well as I think I should have. And I don't expect perfection, and I don't think anybody should. But looking back, I can definitely tell that I held on to a few ideas much longer than I should have. And I will be able to correct that in the future. The second part to that is, I think it's quite obvious that the buy side is important too, and you need to buy low. So when you're taking the profits from these companies, obviously you got to look for those sectors that really don't probably interest you or interest the market. That's where you're going to find the best valuations. And that's where, if you can look at the metal or that particular company and you have a 2 or 3 year time span, that's how you can be right and hit these on the sentiment change. Because really that's where the easiest money is made. You look at uranium, lithium, nickel, any of these markets that have been bullish over the last 4 years. Really, it's that initial push where that easy money is made, and then it becomes a little bit harder. The second part to that is the people who don't do this full time. I highly suggest that you're taking those profits out, and you're taking some of that exposure to the sector and putting it into real things. And this is paying off your mortgage, house improvements, buying that new vehicle that you need, or maybe the best yet is investing in yourself, whether that's further education as an investor or whatever else you or your family needs. So now I want to go through a few of the bull markets that we've seen over the last 4 years and kind of go through, and prove the fact that these things have ended, even though these bullish sentiments or ideas are still pretty prevalent in them. Nickel's a great example. I followed nickel for the last 5 years. I'm from steel manufacturing. Nickel's always been kind of near and dear to my heart and interest. Indonesia's or nickel's bull market back 5 years ago, it was a steady increase little by little to begin with, and it was based off Indonesia, and still has Indonesia is a huge part of the nickel narrative. They were trying to bring secondary refinement back into their borders, so they restricted production, and this had an effect on the overall nickel market. Fast forward, you get to Biden's election in the U.S., and I think that really was the catalyst for this green revolution. And you look at all the metals that have sort of sprung up over the last 3 or 4 years, it's probably the basis is on this green revolution or electrification of the world. And nickel's no different, especially the fact with the high energy density and these high nickel content batteries, 811, 532. I think it was quite evident for investors to adopt that idea. Hey, look, nickel's probably going to be important in the future. Next to that, you also have the Russian-Ukraine conflict. Russia is, unfortunately, a big part of the nickel market. That spike you see in the price, I believe, coincides directly with that LME closing. I think it was for a day or a week, and you can see how the price reacted. But obviously, the main point to take away is that this is more like a mountain or a hill. There was a nice beginning, a nice spike, and there was a fall. A couple companies, FPX Nickel, which is a company I cover in my newsletter and I still own, Talon Metals, these both had great returns over the last 5 years, particularly in the height of that bull market. The thing is all their share prices have come right back. And today, I would say they're arguably better companies than they were at the height of their spike, outside of the nickel price and how that factors into their valuation. But they're better companies today, yet they're selling for probably less than half of what those highs were. And so these bull markets do come to an end. And it doesn't mean that you have to necessarily sell out the company totally, but you have to take profits when the profits are there. And you either end that idea altogether or you revisit it once we've reached these so-called maybe bottoms. Lithium market, obviously, like one of the hottest markets we've seen over the last 3 or 4 years. And the price action was crazy. And you mix this in with discoveries like Patriot Battery Metals, and you have unbelievable returns. The lithium story, again, is based off that EV narrative. But I think even more so, which flows into the other metals more so in the future, is this deglobalization and the fact that security supply, I think, is going to be that much more of a thing moving forward. Nationalization will probably matter more and more. But lithium took off, and then unfortunately it's come right back down. So if you didn't take profits, again, you're holding on to these companies, and who knows when that next swing is going to be. And that's, again, an issue. Uranium market, we're in the midst of a bull market here. You can see the divergence between the spot and the future price. I think that eventually has to come together. It doesn't mean on the downside. But the divergence between the two is quite large. Again, built off the narrative, but also with uranium, it's a lot about supply. The Sprott Uranium Trust has come in and cornered a big portion of the available uranium on the open market, and I believe they're raising right now to corner even more. And I think that's a big reason, along with uranium prices being so low for so long, why you've seen this spike and it's been strong. But it's going to come to an end at some point. And so you have to have an idea of how you're going to sell your companies or whatever exposure you have to that uranium sector and look for something else. So which metal will be next? And I've got two up on the board. I think gold, to me anyways, I think poses probably the best chance to enter that bull market next, especially because of the commodity price. And then maybe copper. So the gold price has been extremely strong. Today we sit around $2,000 per ounce, which is basically at the all-time high. But the difference is the equities haven't followed suit, and this is where the opportunity might be. Here's a chart of GDX, and if you look back to the 2011 high, and that's at $1,900 gold back then, which was the all-time high at that point. It reached a level of $70. Today we sit somewhere around 32. I'm sure it's higher when I did this presentation. But you can see that gap there is the potential maybe of what could come in the future if we get a narrowing between the gap between the equities and the underlying metal price. I put 2 stars on, and like I said, the 2 bull markets that I had the most success in are at those stars, and you can see they pale in comparison to where that 2011 high, which means, if you pick the right companies, you can have multiples of the so-called double that we might see in the GDX. For gold, I think the obvious thing that has to happen is the U.S. Fed has to pivot in their interest rate policy. Whether that happens today or if it happens on the back of some other extreme event which forces them into it, I think that's key to bringing people back into the equities. So is there an opportunity in copper? And I think this one needs more discussion because I think there's both bullish and bearish points on it. So on the demand side, there's a lot of talk of recession with interest rates spiking as much as they did back just over a year ago. The instability in Canada, the U.S., and among many of the developed nations is palatable. Like we can see all around us, those of us, especially in the Canadian market, who has real estate market was red hot, I think can start to see around them the kind of the downfall of having higher interest rates and what happens when people are highly leveraged. At least where I'm from, you can see for sale signs up, and I know the stories in my small town of who's selling these homes, and it's based off them being second homes in these high interest rates. You balance the recession talk against net zero carbon emissions. And I think copper's in that unique position because it basically is impacted on every part, whether it's EVs, but maybe more importantly is the electrification or the infrastructure that's needed for this electrification to happen worldwide in any developing nation. And that's why I think you look at most analysts and they'll show that the copper production basically needs to double over the next 26 years to attain the net zero carbon emissions goal. I think it's insane. I don't think that that's going to happen at all. But it's still very bullish for the copper market, and that's good. But it's going to have to balance against this potential recession that may or may not happen. On the supply side, society has said, "Hey, look, we want net zero carbon emissions." But the funny thing is, we don't want you to mine any metals to do it. Panama is the perfect example over the last few weeks, months, with the closure of Cobre Panama. That's a mine that represents, I think, close to 1.5% of the world copper production, and it's gone. And that's not replaced overnight. Second to that, new copper mine development. So most of the copper production that we see worldwide is made from porphyry deposits. And these things are billions of tons, and they cost billions of dollars to develop. And these things aren't developed, overnight. And that cost of capital right now is super high with, I think most companies that I've talked to that are looking for capital from the traditional sources, you're talking 14, 15% interest on the debt portion of that raise. And when you put billions of dollars, it's huge. So obviously the copper price has to be much higher to incentivize further construction. Now the balance between the two of them is, well, we all know what it costs, especially in Canada and the States, when you go to the grocery store and what you're paying for groceries, your gas, all these things, the cost of living has only gone up. You contrast that against these goals and you wonder what the tipping point is. How far can we actually go before people say, hey, you know what, these goals, while they're very good, just aren't realistic in the current environment. The second part to that is permitting. Again, this is a big story, especially on the copper side, where you have some massive copper projects that are sitting on the outside waiting for this environmental permitting that in some cases probably will never come or is taking years and years to actually get. And so again, this is the other side to it, is if we want to see copper production, the permitting has to be there and has to be there within a timely manner. Finally, mergers and acquisitions. M&A is, I think, is a point where we can see the equities rise without necessarily a big bump in the copper price. Mark Bristow, in an interview with Bloomberg, I believe it was last quarter, and he said, as gold is precious, copper is strategic. And I think it's very telling into, not only how he sees copper, but I think how a lot of the other CEOs see copper moving forward. It's obviously a strategic metal. And for those countries that are able to secure that supply, it's going to be meaningful as we move to that net zero carbon emissions goal. And so whether it's Barrick with the rumored possibility of grabbing First Quantum or anything like that, again, I think you could have a pile-on effect and investors could be more interested in the copper equities. Another company I cover, Solaris Resources, they just had a $130 million investment by Zijin Mining. I have no doubt that Zijin probably tried to buy Solaris outright, and I bet it was a low price. And unfortunately for them, Solaris is controlled by Richard Warwick and management with huge positions, and they're not going to let that thing go cheaply. But I think it's very indicative of all the so-called problems with NGOs in South America or permitting issues, yet these companies are still making big investments in juniors. G Mining Ventures, it's led by Louis-Pierre Gignac. The Gignac family is synonymous with both company building and mine building. On the mine building side, G Mining Services has been building open pit gold mines across South America and Africa over the last 10 or 15 years, and very successfully. I think investment in G Mining is based around those people and based around their ability to execute, which they're doing. The Gignac family owns 8%, but I want to bring your attention to La Mancha and Franco-Nevada, who took strategic positions in the construction financing package. And I think it's indicative of not only Tocantinho's, the technical ability to become a mine at some point, but it's mostly based off the Gignacs and their ability to execute on mine construction, which is not an easy thing. We're over 70% complete in construction and well on our way to the first gold pour in the second half of the year. If you attended Metals Investors Forum last year in January and you listened to me and then you listened to the G Mining presentation and you bought shares, today you're up over 100%. And compared to the rest of the market, you've done extremely well. And I fully expect that share price to continue to rise as long as the gold price stays basically where it is, leading up to that first gold pour. Vior. Vior is led by Mark Fedosevich and Laurent Eustache. Both have good experience in the sector. Their working capital position is pretty good, and that's made up mostly of shares in Ridgeline, which I don't think they want to get rid of yet, but still it's a strong working capital position. Management owns 14%, of which 9% Mark owns. So from a skin in the game point of view, their management is fully in there. Next, Osisko Mining owns 14%, and really they were key into the consolidation of the Belterre Gold Project, which is Vior's main focus. They do employ a hybrid prospect generator model, meaning while they do focus on Belterre 100% with their own money, they do joint venture out the rest of their portfolio. And to me, it's a nice balance of risk in exploration, which is very risky. Belterre Gold is home to the past producing Belterre Gold Mine, around 750,000 ounces at 10 grams per ton. The obvious brownfield targets are the down dip extensions. But probably more exciting is the greenfield. And we're talking about a property package that's just southwest of Val-d'Or. That's almost 600 square kilometers. And there's a number of greenfield targets that they're going to be looking at and hopefully do a sizable drill program. 30,000 meters has been put up, but we'll hear more in their presentation. And there's the potential for lithium. Field notes, I started it last quarter and the last quarter of last year, and it follows me on my field trips to or site visits to the companies that I own in my portfolio. Episode 1 is all about me and kind of my transition to an investor full time, followed by a site visit to FPX Nickel's Dakar district in central BC. And then there's also a great interview with Dave Lotan, who's a longtime sector investor, and there's a ton of information and thoughts to glean from him in that interview. Junior Stock Review, it's published weekly. I rank all the stocks in my portfolio. It represents my personal portfolio, and I obviously answer any questions that are asked of me by my readers. Any questions, you can get me here, or you can always get me in the hall. Thank you very much.